Hey everybody, Sean here with Eaton Realty, talking to you about renting, selling your home in this video series and what is involved when you choose to go down that rental path. We talked about how to prepare your home for rent, how to market your home to find that perfect tenant, and now I want to talk to you about profiting in property management and renting out your home. How do you make money doing that? And there's several different ways. The first, we're going to talk about the tax benefits. So as we mentioned earlier, all of the expenses that you have associated with your property are, if not everyone, almost all of them are tax deductible, which means you can write those off of your taxes at the end of the year to offset any income that you've made. So that helps a lot. The second, depreciation. So you can depreciate various assets of the home. Cabinetry, for example, carpet, those can be depreciated in a rental home over a 5-year term rather than a typical 30-year term of a home that you're living in. So there are certain things that your CPA or your tax advisor can help you with to save some money there and advance that depreciation a little bit sooner. Third, refinance to increase your monthly cash flow. So if you're, depending on what the current interest rates are and the interest rate on your mortgage, refinancing it, if you can save recoup the costs of refinancing within a couple of years, it's usually worth it to go ahead and do that, depending on how long you plan to keep ownership of the home. If you've lived in the home 2 of the past 5 years and you sell it at that point, it's important to know that the increase there, the capital gains that you earn on that are tax deductible. So the rule is 2 of the past 5 years, you have to have lived in the home, and whatever you purchased the home for, however much higher that home is worth when you go to sell it, let's say you made $100,000 then on the sale of that home, that $100,000 is completely tax-free. So you don't have to pay taxes on that. That's a big deal. However, you do have to have lived in it 2 of the past 5 years. So let's say you rent it out for those 3 years and then you end up keep renting it even longer than that. Other options, there's a 1031 exchange. So you can take the money from the sale of that home and buy another rental home with it and roll those capital gains forward. So that still just kind of kicks the can down the road a little bit. You're still going to owe those taxes eventually, but you don't have to owe them then. So you can take that and push that off into another investment property to the future and kind of keep that money rolling forward. So people will also pay more for convenience and condition. So you may want to include some features in your home as far as maintenance goes. So lawn care, various services, pool service. Some people structure their leases so that those are a tenant responsibility, but like I say, people will be willing to pay more for the convenience of having that done for them. That's, after all, one of the main reasons why they want to rent a home in the first place. They don't want to take care of the maintenance and the upkeep of a place. So you may be able to get a higher rent rate, at least a premium rent rate, the highest that the market will allow, if you include some of those additional services. So that's how you can make money in renting out your home. The tax benefits, look at depreciation options, refinance it to increase your monthly cash flow. If you live in it 2 of the last 5 years and you sell it, you can defer, or you can actually get a capital gains, no capital gains at all, tax benefit there, and people will pay more for convenience and condition. If you're interested to find out how much your home is worth, visit our website, eatonrealty.com/rent value, or give us a call. We'll be happy to help.